What if a conflict halfway across the world could change your financial future? Intriguing, isn't it? Welcome to a world where local events can have global implications. A world that's interconnected, where the ripple of a stone thrown in the Middle East can cause waves across financial markets worldwide. Today, we're diving into the recent Israel-Hamas conflict, a geopolitical hotspot that has potential consequences reaching far beyond its regional borders. This conflict, like many before it, has the power to reverberate across the globe. But it's not just about the immediate impact. It's about the potential long-term implications on economies, markets, and assets. It's about the domino effect that can be triggered by a single event, leading to a ripple effect that influences the price of oil, the value of gold, even the trajectory of cryptocurrencies like Bitcoin. Consider this. In the aftermath of violence, economies can falter, markets can waver, and investors can be sent scrambling for safety. Assets that were once considered stable can suddenly seem uncertain. And in the midst of this uncertainty, new opportunities can emerge. Opportunities that can redefine our financial landscape. Now, you might be wondering, how can a regional conflict in the Middle East influence your investment in Bitcoin or gold? Or how can it impact the price you pay at the gas station or the value of your stock portfolio? Well, that's the power of our interconnected world. A world where geopolitical events can influence economic trends and market movements, shaping the fortunes of investors and the fate of assets. So, as we delve into this topic, keep in mind that no event happens in a vacuum. In our globalized world, the reverberations of a regional conflict can echo across markets and assets, affecting everything from the price of oil to the value of Bitcoin. As we delve deeper, let's remember, in today's interconnected world, no event is isolated and no asset is unaffected. As the smoke clears in the Middle East, ripples are felt in Wall Street, London, and Tokyo. Picture the scene: a local conflict thousands of miles away has the power to send shockwaves through the beating hearts of global finance. It's a stark reminder of how interconnected our world really is. We're not just talking about the political or humanitarian implications here, but the financial impact, the reverberations that echo through the towering skyscrapers of financial districts around the globe. Take oil, for instance. It's not just a commodity, it's a lifeline, a driving force that fuels economies and industries. And when the conflict in the Middle East flares, so do oil prices. In the recent Israel-Hamas conflict, oil prices jumped as investors worried about a possible escalation leading to a wider regional conflict. The price of Brent crude rose 3% to nearly $87 a barrel, while West Texas Intermediate followed suit. What we're seeing here is a classic example of the correlation between geopolitical instability and market volatility. When the world stage is rocked by conflict, it's not unusual to see investors scurrying for safety, moving their assets around like chess pieces on a board. And it's not just oil, it's stocks, bonds, currencies. The list goes on. The US stock market, for example, felt the tremors. S&P 500 futures slipped, Nasdaq 100 futures were down, and the Dow Jones Industrial Average was expected to drop around 200 points. And Israel's stock market index, TA35, well, it experienced its largest loss in over 3 years, falling 6.5% on a single day. And so we see that a localized conflict can indeed rock global markets. But what does it mean for individual assets? Gold, the age-old safe haven, but is it still the go-to asset during times of crisis? Let's take a moment to delve into the historical role of gold during troubled times. From the days of ancient civilizations to our modern world, gold has always been revered as a symbol of wealth and stability. It's a tangible asset that can't be wiped out by a market crash or devalued by inflation, making it a reliable store of value during times of economic uncertainty or geopolitical unrest. Take, for instance, the global financial crisis of 2008. As economies crumbled and markets tumbled, gold prices surged, reaching record highs. Investors flocked to the precious metal, seeking refuge from the stormy financial seas. Fast forward to the present day, and we find ourselves amid another crisis, the recent Israel-Hamas conflict. As tensions escalate and fears of a wider regional conflict grow, how has gold responded? In the face of this geopolitical turmoil, gold prices have remained relatively steady, continuing their steady climb upwards. While they haven't skyrocketed like they did during the financial crisis, it's clear that investors are turning to gold as a safe haven once again. This isn't to say that gold is immune to the effects of conflict. On the contrary, its price can fluctuate in response to changing circumstances. But even in the midst of uncertainty, gold's enduring appeal as a reliable store of value shines through, drawing investors in like moths to a flame. Gold remains a beacon during turbulent times, but what about the new kid on the block, Bitcoin? Bitcoin, the digital gold, but can it step up as a safe haven in these trying times? As we navigate through the stormy seas of global conflict, many investors are asking that very question. Bitcoin, the first and most famous of the cryptocurrencies, has often been compared to gold. It's decentralized, it's scarce, and it's not directly tied to any one nation's economy. These factors make it a potential hedge against traditional financial systems. But how has the recent Israel-Hamas conflict influenced the price of Bitcoin? Let's delve into it. The conflict has caused a lot of uncertainty in the world markets. This uncertainty has led to an increased interest in alternative assets like Bitcoin. Investors are looking for ways to safeguard their wealth, and Bitcoin, with its decentralized nature, seems to be a viable option. However, it's not just the conflict itself that has driven people towards Bitcoin. The aftermath of the conflict and the potential for further escalation has also had a significant impact. As the world watches and waits, investors are hedging their bets by diversifying their portfolios, and Bitcoin, with its potential for high returns, is a tempting choice. But it's not all sunshine and roses. Bitcoin is still a relatively new asset, and its price is highly volatile. This volatility can be a double-edged sword. On one hand, it could lead to significant profits. On the other hand, it could result in substantial losses. As with any investment, it's important to do your research and understand the risks involved. Bitcoin continues to make waves even amidst real-world conflicts. But remember, the cryptocurrency market is still young and volatile. As we move forward into this new era of digital gold, it's crucial to keep our eyes open and our minds sharp. After all, in the world of cryptocurrency, fortune favors the well-informed. So, what have we learned from this web of conflict markets and assets? We've taken a deep dive into the recent Israel-Hamas conflict and its ripple effect on the global stage. We've seen how the specter of war can send shockwaves through markets and economies, far beyond the immediate geographical area of conflict. We've explored the role of gold, a timeless asset that has long been a refuge for investors during times of uncertainty and instability. Historically, gold has served as a hedge against inflation and currency devaluation, and it continues to hold its own in the modern financial landscape. Then we move to Bitcoin, often termed as digital gold. In an age of conflict, we delved into how this digital asset has been impacted. We saw its potential as a decentralized, borderless store of value that could potentially offer a degree of insulation from geopolitical tensions. But we also acknowledged the volatility and unpredictability of such digital assets, reminding us that while they offer potential benefits, they also come with their own set of risks. Most importantly, we've underscored the significance of staying informed. In a world where the political and economic landscape can shift in the blink of an eye, knowledge truly is power. Staying abreast of geopolitical events, understanding their potential implications on global markets, and making informed decisions about where to store and invest our wealth can mean the difference between staying afloat or sinking in these tumultuous times. As we navigate this new normal, we are reminded of the interconnectedness of our world. A conflict in one region can reverberate across the globe, influencing markets, economies, and even the value of our assets. In this ever-changing world, information is power. Stay informed, stay ahead, and most importantly, stay savvy. Until next time.